make an ATM. What Ninja call it? It's a bracket order. These guys, you guys know that the ATM is nothing more than a bracket order.
Yeah, that's true.
Bracket order work.
Yeah. Yeah, it's almost like, and it really is. After it's trust me, guys, I've lost money for 49 months in a row, and after a while, way before the 49 months are up, you start feeling that the market, everyone is against you. Like trade station programmers know where your stop is, floor traders know it.
I used to think everybody knew where my stop was.
Yeah,
they're looking at me. They're taking my stop out.
Yeah, they're after you for your one contract. Your $100. The whole world is going to take your $100 and split it up and make a ton of money off of you. And it's sad. You become like that. You become paranoid.
Bunch of jerks taking my stop out. Oh, Anna, we're actually going to go through tomorrow's lesson. Will be support and resistance, since we didn't get to it on this past Thursday. In basic training.
But yeah, that's a good one. Also, I would attend that.
Plus, yeah, you should attend it. You should attend basic training tomorrow, support and resistance. But you should also understand, Anna, that we have our institutional friends that we talk to that have input into that support and resistance number. Remember Grandma, Anna? All right, there you go.
Yeah. Helps out friends. Every little bit of an edge you can get helps people. You start with the big picture, which is called your strategy. Your plan is based on the bigger picture. And then what? You narrow it down to your tactics, right? So the first thing you do, if somebody just came in, let's say in the last 10 minutes, anybody come in the last 10 minutes? All right, Anna, you tell me, Anna, what's and Ken, good morning. Let's go step by step real quick. What's the 15-minute chart doing, up or down? Is it an uptrend or downtrend? Uptrend, right, Anna? You agree? You don't need to look at extended and trend lines or anything. Two calculations, not even calculation, just look at two things. All right, what's the 60-minute trend, up or down? Agree, Anna? Agree with Ken? Disagree? Both of them are up. Now let's find the daily pivot. And that also is calculated automatically. Ooh, it's all the way down there. Holy cow. Are we above it or below it? All three elements say up, right? So what do you want to do? What's your strategy? Do what? Go long. How do we go long? Long only. We wait for pullbacks and buy. Right? That's it. That's the simplest plan. Yeah. Now, will the market pull back 90 points? Maybe, maybe not. The only way an institution can get into a trade is by a counter trend move. Do you realize that, guys? If you've got 1,000 contracts to buy, you can't buy as the market goes higher. Yeah, but well, think about it. Look how many, look at the bids and offers. I see 10 offered at 945. I see 14 offered at 943. If you had 1,000 contracts, it would go up about 120 points by the time you got filled. Now, of course, once it's running up, some people will see that and say, oh, I'm going to take profits here. But the point is, you could see the offers. You would not be able to take care of your liquidity. So the only way an institution is going to buy is by pushing it down. They'll actually run the stops, knock the market down, and then buy it up. If they want to go long, if they go short, they will push the market up, run the stops of those who are short. And then as the stop, who panics? The little guy panics. The little guy playing 3 contracts. Oh my God, it's going up. I got to get out. They'll get out. And guess what? While they're all panicking, what? When you panic, your order is what? Panic means market orders, right? That's why most professionals don't use market orders. Now you say, well, wait a minute. What about a breakout? Yeah, but institutions don't use breakout orders. Do you realize that? They're the ones breaking it out. They've already accumulated and are pushing it higher. And when I say they don't use order, they may, if in other words, right now, for example, if there's a limit order to sell, at 964, right? Let's say at 964, they're equal 8 contracts. What do you think Goldman Sachs is going to do, or a trader like that? They're going to buy all 8. That means there's no more orders, right? And then they just clear it out. As a matter of fact, there's only 5 at 964, 5 contracts. So right now, all they have to do is push through that, right? Pretty easy, right? Not hard at all.
Order filled.
Take one more off. We start trading in 19 minutes. Have I ever traded the London session? I mean, I was up that time. Yeah, I've been up all night. Sure. Don't do it because your eyes get sort of tired the next morning. This morning they were buying the London session, by the way.
I did have a buddy that lived on the left coast with you, and he would trade the London session all the time.
Yeah.
Don't know how successful.
Probably Robert. Robert probably trades all night long.
The funny thing was, his name was Robert.
Wow. There you go.
Not our Robert. Well, you know what our advice is, Anna. If you want to trade it, do it in sim first for a while. Get a handle on how that session trades.
Now, by the way, guys, you say, well, why was I selling 961? Remember what we identified earlier? This was way early, around around 8:20 this morning. Who remembers our comments around 8:20 this morning? 8:22 to be exact. So it works the same way. Yeah, it works the same way to take profits on the long side. But if you had to short, if you like money was burning a hole in your pocket and you had to go short, I would go short at 960. These are for your counter trend traders like Tex Bob. The big boys are long, but they're long, thousands of contracts. But for all those who enjoy that nice little, 20, 30 point pops, you certainly can take counter trend shorts. We have clients that do both kinds of trading. Now, when I was trading for a living and not having a trading room, yeah, there you go. I wouldn't be happy. I want those, 300-400 point winners. I want to be a trend trader. And I was, Bob. I'd trade 20, 30 contracts. I'd be long from, 8 in the morning and I'd still be long. But that's me, I had an airplane to support.
Albert was wondering about your 90-point pullback comment on the opening comments.
Yeah. But, guys, I could trade short term with anyone on the planet. We want to teach you guys to be with the trend and get bigger gulps and chunks out of the market. That's the only reason. And Tex, I hope you don't look at that as a criticism. But obviously you're going to make a lot more money being with the trend and getting, I like my coach, Linda Raschke, be in a trade for 3 days. And not only that, the problem you would think, right? And this is what the fallacy is. Oh, if you could trade long term, much easier to trade short term, right? Who believes that? It's harder to trade short term. And that's what made my money go away for 49 months. Because I was an investor. I would cold call clients, explain stocks, send them out reports, call them back 2 weeks later. Why? Because you had plenty of time to buy Philip Morris. It was down for a year and a half. You had a whole year and a half to buy that stock. And it wasn't going to go out of business. Citicorp. And the clients just accumulated, called you. Hey, Merry Christmas. Yeah, did you get your dividend? You got your dividend check. And the stock went up. Well, I got bored with that. So I said, any idiot could trade day trading. I had to pick a stock that's going to make money in 18 months. Yeah? Try it. I didn't. And that's the fallacy. So here we go. Can you make money trading the 60-minute chart in an uptrend? Yeah. So I should be able to scalp a 133 tick chart. Anyone can do that, right? Try it, guys. Try to do it what Tex Bob is doing on day one. And Anna, perfect example. Again, I'm not trying to criticize clients. We're learning from them. Anna, you had those 46 trades down what, $114,000 on the sim? 46 scalps, and they lost. Tex Bob trades 23 times and makes money 22 times. Why? Because after a while, how long have you been doing it, Tex Bob? See, I get a lot of that. What is Tex Bob doing? 15 years. And you know how many comments I get, Tex Bob? Oh, can you show me a system? No, I'll show it to you. Come back a year from now. I'll show you how to scalp and tape read. Sit next to me, guys. I'll teach you all you need to know about tape reading. But that's the last thing to do. That's like signing up for a gym, and the coach says, okay, we're going to go stretching and now some light weights, punch a heavy bag. And at the end of the week, your muscles are sore and everything, right? And you're like, wow, this is tough. Yeah, get in there. Okay, next week, you're going to fight Mike Tyson. Oh, good. Can you show me his weaknesses? No. You don't take up boxing and a week later. Even now, I wouldn't fight Mike Tyson, right? He's what, 53? He would kill you. But people are, trading. Well, anyone can trade. Yeah, and that's the only problem with trading, guys. They'll let anyone in. Yeah, I love it. I think it's a great story. So yes, if you want to practice short-term trading, it's a great skill because you still can time a longer term. What about the 90-point pullback trade we're talking about? Okay, so the market comes down 90 points, right? Obviously, if it goes down 90 points, you're going to have what? You're going to have oversold condition, right? And an uptrend. Well, it might hit what? Maybe it hits your 60-minute chart at 868, right? Comes down to 868. You get a little W formation, Sakasa buy signal, boom, you go long. So if you learn how to scalp trade and you can scalp enter that pullback, imagine the advantage you have of the guy saying, okay, it's at 868. When it gets to 920, I'll go long. So he's going to give up 50 points to confirm his longer term signal where you're going to jump in faster. Isn't that cool?
That is cool.
All right. Yeah, I'm going to get ready for in 6 minutes.
Some orientation
The
time.
orientation room.
Those of you on
Coming
trial,
your way.
please join head coach in the orientation room in 6 minutes.
Give me 1 minute to set it up, guys, and then it'll be available for your viewing pleasure or pain, depending on how you look at listening to me for a while. Right now we're long. We've been buying every pullback this morning. And one of the things we'd like to do is show you the numbers. And that we get usually 8 o'clock. And I'll just show you what sample of what we get. Goes like that, and we post it in the alerts section. I'll try to explain what we do for those who are just beginning to become a member or to check us out. And number one, we welcome you. We have a free trial for 3 days. Obviously, now you get a taste of it, what we do in the morning. The best way to describe our trading method is that we are trend traders. Trend meaning based on like a 60 and 15-minute chart on the Dow futures. All right. So we trade with the trend, but we don't chase. So we buy pullbacks, which means we're like waiting for a counter trend move on a shorter time frame. So the best way to say it is like we'll go long when the 60-minute trend is up after the 1-minute trend is down. So that's a retracement, right? The 1-minute trend goes down, hits a bottom, and hooks up, and we take it long. Those are the ideal trades. We have usually about 6 methods to enter these, or formations, or setups, if you want to call them, and they work very, very well. We don't expect you to believe what we say. We expect you to just observe. And if it's something you're looking for, join us. Right now, Coach Brian, an amazing trader, coach, instructor, motivator, is one of the most amazing people I've ever seen, is running the actual main trading room. All right, we're open for business now. And like I said, we've been long. We're taking profits and pulling the stop up. Now, for normal new traders, we suggest no trading for 6 minutes. Not everybody, but our newer traders. So we want them to see and observe what the institutions are doing. Where's the buyers? Where's the sellers? So usually no traders for 6 minutes. So this long trade that we've been in really was for people in an hour ago. And when what we did was we buy like what we call a first touch rule. This was our first trade this morning. And then we took a short trade here. And then we bought a pullback toward this first touch rule, which is this goldenrod moving average, which is an 89 exponential moving average. So short trades would be discouraged, although we have them. Short trades would be discouraged for newer traders. In other words, counter trend trades. Any questions so far? If you do this the right way, step by step, it's an amazing business. It's extremely lucrative. If you do it the wrong way, you're going to join the 90% of traders who lose. 90% of the people lose. we have an automated sort of a rule-based system. It's called Sakasa. You'll see it post red bars and green bars for long, like there. It doesn't care about the trends. It cares really about short-term reversal patterns. Sakasa in Japanese means turnaround or reversal. It's spelled Sakasa. So if you were joining us, you'd have to wait 3 more if you're a newer trader. Now, what happens if you've been trading for 10 years, you're marginally profitable, you really want to get into this? Well, we just say accelerate the course. So the way it goes is, I'm hopefully explaining how we take trades. Then you come in for 3 days and watch us actually trade in the main trading room, right? So you spend 3 days with us, watch us trade. And then you say, all right, that could be just 3 days of what? 3 days of luck. So then we invite you to check it out for another month. And we'll only charge $99 for a whole month. You don't do anything. You don't learn anything. You're just watching us trade. Now, if you really believe it, we can actually teach you, and you have access to our videos, courses, and actual private sessions with a personal coach, myself, Coach Brian, and we have a couple of others. And that's $299 for a month. Once you've done that, now you're going to practice on a simulator to see if it makes sense. It doesn't matter that we could trade. The question is, can you follow the signals? Not everybody can. So once you can, you establish your own track record. And now you try it out on a short-term basis, small account with a micro mini. Believe it or not, we encourage everyone to start with about $500 in your account. We don't want you putting $1 million and blowing it all out. This way, you can't lose much. And I've had people take money out of their account. I said, prove that you can make money with $500. If you can't make money with $500, how are you going to make money with $3,000? You know what that does? That encourages bigger losses. By the way, any questions on losses? I can tell you, on a full contract, it's about 25 points. So about, $125 per contract. And there's no reason to trade more than one contract. You develop a track record, your own, and then you can start adding money and contract sizes to your account. That's when your goal can be at least $1,000 a day, or $1,000 a day for somebody who's got $10 million is nothing. Our goal, which is achievable on average, is about 1% at the end of the day. 1%. Compare that with your mutual fund. So what if you only have $500? I actually can pull my account down to $500 and double it within 2 months. I've done it. You'll learn to do that. But in the beginning, 1% of $500 is $5. Probably can make a little bit more than that, but you're not going to make that much more. Imagine if you could take a $500 account and make 10% per day on it, and then put a $1,000 account and make 10% a day, and a $10,000 account and make 10% per day, and a $100,000 account, right? Make 10% per day. You'd be a genius. You'd be the world's greatest trader. No one can make 10% per day. No one does it. No one ever will. Anyone who says they do is a liar. Why? Because all you have to do is interpolate, right? Their starting capital. Let's say it's $1,000, compounded at 10% per day, and by the end of the month, they have more money than, right? Elon Musk. this would be an example here of a first touch roll, right? Personally, I'm waiting for the market to drop and get an oversold condition on these stochastics. So I'll watch these stochastics, see the 2-minute chart, 15 range chart, and a 133 tick chart. I like to see that oversold, bottom out, and then hook up. And part of your job is to be patient. One of the cool things we give to you, actually, we show you how to calculate, is what we call the volatility number. Anyone here familiar with our version of the volatility number? I don't mean this average true range on a 2-minute chart. I mean our volatility number. It is an estimate of how extensive the swings will be during the day. So again, let me show you. See that volatility, 175? We're saying somewhere during the day today, the market will either drop 175 points or after it drops, rise 175 points. That will be a swing. There will be, we expect a swing to occur of 175 points. That's why we suggest in the morning today, buy a 90-point pullback. So from where? I'm saying, yeah, if the market, it was 989, right? The high so far was 33,989. So if it goes to 33,900, right? That's at least a 90-point pullback. That would be a good area to look for the market to bounce off of. And the reason is because institutions, again, buying pullbacks, it's a lot easier for an institution as to buy 3,000 contracts to buy it when the market's selling off fast. They can easily buy and not worry about getting bad fills if you're buying a 90-point pullback. And you'll notice the market will go down in an uptrend, of course, we're talking about. Market will go down, right? All the newbies get stopped out. They call it weak hands. Weak hands get stopped out. The big boys are like, okay, I'll buy 5 here, 10 here. Okay, nice. I'm getting my fills. Right below the market, they just put 5 contracts. You won't see it. Goldman Sachs doesn't come in there and buy 8,000 contracts in front of you where you could see on the Dow, or 50,000 contracts of the YM S&P. You say, oh, there's Goldman. They don't tell you. They'll buy 5 at a time, 10 at a time. On the YM, believe it or not, it's usually 3 at a time. But they can buy it like a machine gun. So if the market's selling off 90 points today, anyway, they'll buy it 3, 3, 3, 3, 3, 3, 3, 3, just like this, like as fast as you can hit that key. And they get good fills, right? Because the market's collapsing. And then all of a sudden you'll see the market slow down because now other institutions might be buying. And you'll see the market refuse to go any lower. It'll make what we call a double bottom. What happens? But by the time it's down 90 points, what would a newbie do? Oh, it's going down. I'm going to short it. So the newbies are all going short, and that's when the market starts roaring back up. That's why we like to look at this thing here, the first touch rule. We love the first touch rule on this chart, or the 15 range. When it takes out this low right here, Coach called a buy signal on what we call this trade called a fake out breakout. Fake out, breakout, long. The average newbie, when losing 16 points, gets nervous. So that's called a fake out breakout right there at 9. You see that, guys? 33,945 long. On a fake out breakout, a double bottom that failed to go lower right here. It broke that double bottom, and then the next bar went long. And that's based on why we use this range bar, because most traders get nervous. How many people here have ever done a trade, 2 or 3 contracts, and it immediately goes 16 points against you? You go short on a breakout, and immediately it goes up. Ever happen? Only one person it ever happened to? Nobody else? Wow, you guys are good. No, seriously. And we've done that study, guys, when I was at Merrill Lynch. So we take advantage of that, especially when the market is in an uptrend and it goes down and somebody mistakenly takes a sell signal and it doesn't work. So when the market's up, you want sell signals that don't work, right? Isn't that the key? You want a sell signal that doesn't work. Subsequently, when you're in a downtrend and you get a breakout on the upside and it immediately reverses, you want to take that short. These are just common sense trades taking advantage of weak hands. So for today, we're really looking to buy 90-point pullbacks. By the way, these support and resistance numbers that we give, they're based on our institutional contacts. We have a couple that I still stay in touch with. We'll make estimates of support and resistance, and then I'll double check to make sure that there's buying or selling in that area, and we'll make adjustments. Like this morning, my support was 33,650. Well, I found out that there are big orders to buy at 33,590. There's still large orders to go long or buy. We don't, and by the way, I don't know. They don't tell me whether it's going long, covering a short, or whatever. Those are our targets. Subsequently, our upside target this morning is 34,104. That's where there are orders to sell, whether it's to go short and establish a new one or just take profits on the long side. I don't care about that, right? You guys don't care why you're buying, right? Are you buying because shorts are covering, or are you buying because everybody's going long? Buying is buying. Think about this. If you buy, the only reason anyone ever buys is because or they think the market's going up, correct? And I'll get right away. Oh, no, what if you're covering a short? Why would you cover a short? What's the only reason to cover a short? You think the market's going up. Same reason as if you went long. Why would you cover a short if you think the market was going down? You'd stay short. So whether you're opening up a long position, right, or just getting out of a short position, it's the same reason. You think the market is going up. Same reason if you sell. Yeah, but I'm up 300 points. Great. You went long, you're up 300 points. Why sell? You're really selling because you think the market's going to come down. Those are the only reasons. So we don't care why the market's doing what it's going to do. We just take advantage of it. Are there any questions? By the way, Sukasa did issue a sell signal at 33,991. I personally would not take short trades on that. Right? The high was 34,004 so far. So that means the market easily could go down to what? 914, correct? 33,914. Which would be a 90-point pullback. Any questions on how we approach the market on a bigger time frame? So again, if you subtract 90 points, right, your downside target would be 33,914 at least, right? That's how you get these targets. Any questions? Here's the deal, guys. Again, sign up for a 3-day free trial. 3 days free. Then if you like what you hear, try it for a month to see if a longer term basis, we're not just lucky. That's $99 again for 1 month trial. And then when you like that, sign up for our private coaching or professional, the pro level, where you get also private coaching. Believe it or not, only $299 a month. You can quit anytime. You don't have to sign up for a $10,000 course. If you want to come here for a week, yeah, it's 10 grand. It's the best $10,000 you ever invest. Or go to the Wharton School for $200,000. Pretty much ready to wrap it up, guys. Yeah, we're down to 914. We hit it, right? Isn't that cool? Then we look for a hookup. There you go. I went long at 914 and 910. You like that? Any questions? You guys amazed? Everybody amazed? And we call something like this, take your profits. All right, I got to run. I hope you had a good link with us. Those who are already part of our trading room, go back into the main room. Others, I hope to see you guys sign up. LibertyTradingClub.com. Thank you, people.
Welcome to Liberty Trading Club, everyone. Hopefully you enjoyed our live stream this morning. If you're interested in joining us live in the trade room, just visit libertytradingclub.com and register for your free 3-day trial. During your time with us, you'll have access to our live trade calls as well as participation in chat. After your first free 3 days, it's just $99 a month for trade room access. Please like, subscribe, and share.